management of Syngene, then we do have Jonathan Hunt, who's the MD and CEO of the company, joining us. Jonathan, hi, good morning. Thank you so much for taking time out and joining us today. I wanted to discuss your results. First of all, it was a good quarter coming in when you talk about the third quarter, but I also wanted to talk about your Discovery Services division particularly. So the initial China Plus One pilot project with large and mid-sized pharma companies as well, starting to convert into longer-term contracts. So tell us a little more about this particular division then.
Yeah, I mean, I should start with the results. I think overall we saw a return to growth. As you know, during the course of the year, we saw a little bit of softness in the first half. First quarter, second quarter revenue were both -2%. But we predicted that the second half of the year things would start to pick up, and we hoped that we would get back to growth, and that's exactly what we saw. So plus 11% for the quarter, nicely balanced across the business. And as I know you know, we're a research services business, but we're also a development and manufacturing company as well. And all three of those saw positive progress during the quarter. And then in the research services division, one of the trends for the year is seeing clients start to move some of their work around the world. Some are moving it out of the US and Europe, some are moving it out of China, and they're piloting here in India with companies like us, testing our capabilities, really seeing what we can do for them. And we were successful during the quarter of converting a number of those into permanent contracts, and that'll give us a foundation for growth as we go into the future.
Mr. Hunt, this is Cheryl also joining in the conversation. So going ahead, the growth will be more driven by Discovery Services or CDMO. Where will the focus be exactly going ahead for your company?
I think it'll be both. Now, certainly during the last year, the extra growth in the business, one of the key drivers has been our large molecule biologics CDMO. And I think that's well positioned to continue. But the recovery that we saw in the third quarter was nicely balanced. It came both from research services and also from development manufacturing. So that sets the pattern, I think, for the remainder of the year and through the fourth quarter.
All right, then, Mr. Hunt, talk to us about the US biotech market then, because you do have US that has withdrawn from the WHO. What kind of impact then are you penciling in at this point? What do you think about the funding environment as well?
Okay, that's an interesting question. I think the two aren't necessarily correlated. The funding that we're talking about in the US is the ability of innovative biotech companies to raise new capital to really drive their science. That's been quite a challenging environment for the last 18 months. We predicted that during the course of this year, it would start to stabilize. We'd see the beginnings of a recovery in that funding environment. And that's exactly what's happened. A little bit later than I'd expected. I think it probably took a quarter, maybe half a quarter longer in the year for it to stabilize. But now we're seeing people raising capital and they're starting to spend it. And that's one of the things that drove that return to growth in the third quarter for us, was that recovery in spending in the US marketplace. As for the World Health Organization comment, let's see what happens. I saw, like everybody, the pronouncement from President Trump the other day. I'm not sure it really correlates through into biotech funding.
Right. And the company has actually changed its guidance from growth guidance from high single digits to just single digits now. If you tell us why have you gone ahead with sort of a change in the stance or the guidance strategy? And also, if you could help us understand what could be the guidance going ahead for FY26 if you've already penciled that in.
Yeah, we tweaked it a little bit just to be a little bit more precise as we get towards the end of the year. We'd said towards high single digits, and I think that'll be single digits now. And it reflects two things. One, the direction. We called the recovery correctly for us and the stabilization in the market. But as I said in my earlier comments, I think it took a little bit longer than we'd expected, a little bit later in the year for that stabilization and the recovery in the spending. The direction's right, so it's back into growth, but that then has a knock-on consequence. So a little bit just of a tweak on the guidance. I think it'll be single digits rather than high single digits, and we'll update you in the year end.
All right, and that's about the guidance in terms of the revenue then. But what are you penciling in terms of the kind of capabilities that you have? What are you looking at in terms of growth and opportunities? Are you looking at organic growth or inorganic growth? What do you have in mind there then?
Oh, I think we've got everything we need in terms of capital deployment. We're in pretty good shape in terms of the broad range of capabilities. So, one of the things that stands out about Syngene is that we've got a very broad scientific front. We stretch all the way from the very early stages of research and discovery all the way through to manufacturing. And I think that positions us well to meet the broadest possible range of needs in the marketplace.
So let's talk about the capex. Any changes that you have in your capex outlay for FY25, and also if you could help us understand by Q3 how much amount have you already actually utilized?
Oh, so we guided for $60 million capital investment into the business in the year. We're progressing well on that. We're a little bit over half of that's been invested, and the rest I think will continue through into the fourth quarter. So it's looking pretty much on track. Half of that money is slated to go into research services. The next biggest component is into our biologics manufacturing division, and then the remainder is spread across the organization. But I think the message on CapEx is no change in plan, no change in guidance. It's pretty much on track.
All right, and talk to us about the biologics capacity then, because you do have the Stelis facility that was expected to come online in the second half of the financial year 25. Can you give us an update there? And what does the ramp-up process then look like for this particular facility?
Yeah, I mean, you'll recall we said what we needed to do was convert it from what it was, which was a plant that had been built to make biologics, and then we were going to do a conversion of that to make biologics, monoclonal antibodies, and we figured that would take about a year. And it's absolutely on track. So that should finish between now and the end of this financial year, which is pretty much on track for what we said it would do.
So, Mr. Hunt, adding to that, if you could help us understand how much will be the potential revenue contribution in the initial years of the operations of this plant?
Sure, I don't have a specific number to give you. It's more around headroom for growth. Our biologics business has really grown very strongly over the last 3 or 4 years, and we were running out of capacity. So we were getting in distinct danger of not being able to meet all of our clients' needs because we were full in our existing capacity. As we bring the Stelis facility, Unit 3 as we call it, as we bring that online, that gives us further headroom for growth, which I'm sure we'll update at the full year as I give guidance for the year ahead.
All right, that was the management of Syngene International joining us. Thank you so much, Mr. Hunt, for taking our time and joining us today. But with that, let's also take